Alright, what's up YouTube? My name's Alec. I've been a full-time day trader for the past 3 years, and I will start sharing my trades with you guys. I've had my ups and downs. I've gone through dozens of different guru courses. I've lost a ton of money, and I've also made a lot of money. I finally found a strategy that stuck. This is what I share with you guys in every single video. You guys will see it. It's a mixture of algorithm-based trading along with Keltner channels and a bunch of other different variations of indicators. So what I'm sharing with you guys is something that I use every single day. It's something that I use to make at least $1,000 a day. And it's something that I'd like to share with you guys. Alright guys, so my first talk pick is actually going to be Netflix. Netflix recently had earnings and they basically got downgraded by all the analysts because they showed that they weren't going to have as crazy of growth as they have had in the past 5 to 6 years. As you guys can see, there was a huge overreaction based off this chart. We can see a huge downtrend. So basically what happened is it hit massive support, it dropped all the way down to 480, and then it finally came up a little bit and it's been consolidating ever since. On top of that, we can also see that based off these dark pool algorithms that we use every single day, we can see that the blue algo line, which represents smart money buying the stock, has been continuously buying it ever since earnings came out, and we can use that as a way to see that there is divergence between the price and the algo movement. So what this means is that we can see that the smart money is accumulating these shares while this entire run has been consolidating, so that way we can expect to see a pop. So my entry on Netflix will be about 512 to 513. I want to see it hold that level and push through a little bit. And my exit's going to be between 530 and 540. Just to reiterate my position on Netflix, I am going to go long in this at 513. I have a starter position currently with options contracts that are far dated. I will be looking to add more and more, and eventually I will get up to about a $30,000 to $40,000 position on this. Okay, so pick number 2 for the month is actually going to be Shopify. Shopify is definitely an e-commerce play. It actually saw 110% growth year over year for its revenues. I think that's absolutely insane, and I think the pandemic has definitely propelled the stock forward. A quick shameless plug for all of my subscribers. I do have an e-commerce based clothing company named Cove Surf Company. I'll drop a link below, but we use Shopify for our entire back end. They are absolutely amazing. It's seamless, and they provide us with a ton of support. And as a startup, I can't thank them enough for what they do, and I honestly just want to see them excel as well. So I can really only see this company from a fundamental perspective, continuously growing. I think e-commerce is the wave of the future. I think everybody's getting tired of going into stores, trying on stuff, and I think retail really, all the brick and mortar retail will really just die off, and I think we'll see it transition more into pickup and drop-off zones, but that'll be for a different video. I really do think this will be a long-term play, and I really do think that the recent sell-off will have a really good opportunity for growth. Taking a look at the actual chart, we can see, again, there was a huge drop-off right after earnings, even after they announced killer earnings. Like they had 110% growth year over year. So I think analysts are just honestly downgrading this for no reason, and I think big money's selling this off for no reason. Looking at Shopify from a technical analysis perspective, we can see that there was a massive 14% drop after an initial spike up after Shopify released their good earnings. So right here is where Shopify initially grew just a tiny bit. They had amazing earnings. They killed it, 110% growth. And then it basically started tanking. So what happened is market makers saw it as an opportunity to unload their position and rebalance their portfolios. And we can see a 14% drop in the past couple weeks since earnings hit. So looking at this, just from a support and resistance level, I do think that it will stop about 1,090 to 1,095, and that will be my entry. If it holds support, I can definitely see this thing going all the way back up to previous all-time highs. I think it'd go even further past, and I think a down cycle is necessary for any really solid stock. Something to also note is these dark pool algos you can see in the top right screen. Same thing as Netflix. The algos have been buying steadily. There is a slight downturn, so I will wait for confirmation on this position. I am not in it yet, but I will look to scale in slowly. And if it gives me further validation and confirmation at that 1,095 target for my entry, then I will, start loading the boat per se, and I will go in with a $20,000 to $30,000 position. So overall, quick recap on Shop. I think it'll stop at 1,095, maybe 1,090. From there, I'd like to see it consolidate for a couple days, and then we will see a shift upward. We'll get some momentum behind it, and Shop will return to previous all-time highs. Okay, so I know you guys are going to call me crazy for this, but I actually really think that this is going to be probably the best play for my short-term portfolio, and it's going to be Google. So Google also had killer earnings. They did absolutely amazing. They have a ton of cash on hand. They're ready for all the acquisitions. I think they're in a really good spot in the next couple months, especially if the pandemic further harms the economy. They'll be able to acquire a ton of companies that are struggling, and they'll be able to propel even farther forward. So taking a look at the chart, we can see that it is slightly coming through the daily top. Again, I use Keltner channels. This will look foreign to 99.9% of you. But for those that do use Keltner channels, this will make a lot of sense. I am looking for this to actually stop. I'd say around 2313, if not 2300. From there, I will definitely take the opportunity. I'll do an entry, a starter position, and then I'll start loading the bow all the way up until I get really good confirmation validation that's going to go back to all-time highs. Looking at the 15-minute algos on our proprietary trading platform, flowtrade.com, you can see in the top right that there is actually divergence to the upside. The algos have been buying this entire dip, and they've actually been accumulating in a pretty aggressive pattern. So I could see this even going and stopping at, let's say, 2315, 2320. It could go all the way back up to 2400. Having a 100-point run like that, especially with options plays, which is the only thing I play, I think you could definitely pull $10,000 to $20,000 off this like nothing if you're experienced and you understand the strategy. I'm going to wait for it to consolidate, and then from there, I am going to look for my entry. Quick recap on Google. I think it's an amazing play for after ER. There was a little bit of a dump. I think it has potential to go to $2,500, $2,600 before cooling off for a couple months. I think, my entry is going to be 2,300, maybe 2,315. It really depends where it bottoms out. And then from there, I'm going to ride it all the way up to 2,400, 2,450 with some short-term options contracts. Hopefully make $10,000 to $20,000. I'll keep you guys updated. All right, so the fourth stock on my list is going to be Citibank, also known as C. There's a couple really juicy reasons why I like this play, but the first one is the fact that it's been consolidating since early March, while all the other bank stocks have either tanked or actually skyrocketed like Goldman Sachs and BMY. As you guys can see, it's been consolidating between 71.4 and 73.2. I think this thing's due to release the squeeze, within the next 2 or 3 weeks. I'm definitely going to be waiting. Again, I'm not going to buy this immediately. This is not something that I'm currently in, but it will definitely be something that will pay extremely well once you get the right entry. In addition to a really strong support wall in between those two ranges that I discussed previously in the video, there is a ton of money currently in call options. As you guys can see right now for the January 21st leaps, there's actually literally over $30 million in the first 5 strikes alone. And if you scroll throughout these next couple strike dates, you can see that there is a ton of other call activity on it, and there's also a ton of volume, which is amazing. So for a ticker that generally doesn't do too much, I really think that there's a ton of money moving into this. Past 3 trading days alone, there's been $210 million in dark pool purchases. What this means is that the $71 and $70 level, dark pools were actually accumulating all the shares that they could, and they were just loading tens and tens of millions of dollars in each and every single trade to load up all these positions. So that's forming a really, really strong support wall at the $70 to $71 range. Additionally, as per my other 3 choices, the algos have been buying steadily on this on the 15-minute chart, which is something that we use to look at a longer time frame swing-based trading approach. This definitely does have some divergence to the upside. I see at least a $2 to $3 run in the short term, and I see a lot longer run in the long term. So overall recap on Citibank, or the ticker C, I think this is an extremely good opportunity to get in the next 2 to 3 days. I see this thing running from $69 or $70 all the way up to $75, $76. There's been a ton of dark pool algo activity in addition to a ton of call volume on it. I think that, if somebody's loading $30 to $40 million in an option play, there's definitely something to it. It's not something you see every single day. Alright guys, so my final pick for the month of May for my long-term account is actually going to be XBI. XBI is a biotech-based S&P 500 ETF, and it's recently been consolidating after a pretty decent run. So from a fundamental perspective, I think that this thing can definitely move up a lot in the future. I think with a lot of mRNA and other DNA-based plays, I think that we can see a ton of growth in this sector, especially with different COVID vaccines. From a technical analysis perspective, which is really what I use to trade and really the main thing that I use when I'm confirming and validating my trades, you can see that this actually hit the daily top right here, and then it's been coming down ever since, but it's been consolidating and it's been kind of step laddering sideways. So when I'm looking for an entry, I'm actually going to look for this to stop at the 130 to 133 range. From there, I'm going to look for it to trade sideways to consolidate a little bit, and then I'll be ready to take this up to the next level. So again, target's going to be about 130, which is this yellow line right here, and then I'm going to look to take it up to at least 140, maybe $145. We will see. Something to note about XBI is that the options pay extremely well. I was playing this a couple weeks ago when it was running really well. I made over 300% on my options, and I really didn't try that hard. I think it's just something that has pretty low IV since it's an ETF, and I think it's something that you could play in a pretty cyclical pattern and find some really easy revenue off of it. Again, I can't beat a dead horse enough, but looking at the 15-minute algos on this, there's definitely divergence to the upside. It's been selling off the entire time while the algos have been accumulating. I see divergence all the way up to at least $140, so I really don't think that that is something that is completely out of reach. It is definitely reasonable. On top of that, as you guys can see by the blue and the pink lines that are horizontal, those are actually dark pool buys again. So it's been holding that level. That is extremely strong support in my eyes, and I think that's something to look at when determining whether or not you want to enter into a swing-based play. I really don't do this to flex on you guys. I'm only doing this for informational purposes and educational purposes, and I want to show you guys that it is possible to be a full-time day trader. I think with the right strategy and the right trading group behind you, you can definitely succeed in anything you do, whether it be swing-based trading, it be long-term, or it may just be intraday scalps, which is honestly what I love to do. If you guys want to see more of this content, please feel free to leave a like on the video, leave a comment in the comment section below, especially if you have any tickers you want me to take a look at. I do a live Sunday scan session every single Sunday at 1 o'clock p.m. Pacific Standard Time. I'm based out of California. So if you guys want to join in, please feel free. It's going to be on YouTube, and I'd look forward to seeing you guys there. So that's all for this week's video. If you guys have any questions, any comments, please feel free to leave them in the comment section below. And thank you guys for tuning in. I'll see you guys in the next